Hello friends, welcome back to our class. Today's class would be the last class related to chapter number 1, which talked about the conceptual base of accounting, wherein we have seen what accounting is all about, how accounting can be of use to us. We also talked about the accounting concepts, principles and accounting rules which needs to be understood or kept in mind while we perform the activities or functions of an accountant. Or if we are the user of the accounting information, we need to know as to what are the rules based upon which these accounting or financial transactions have been communicated to them, right? In today's class, we'll be talking more about the users of accounting information. Then we'll see as to the branches of accounting. So these would be the main topics that we would be covering in this very class. Talking about the users of accounting information, who could be the users of accounting information? Let us take a simple example for this. If I say, who would be interested in your report card? Who would be interested? The first one would be you yourself, your parents, because they have invested money on you, your friends, because they may be your competitors or they may be your partners, your neighbors, your school or your educational institution, just to see how their performance was. Similarly, the government of India, just to see how the literacy rate is going in the country. Similarly, the media personnel, to find out or to make a news out of it, or say researchers, just to find out how the education process is being carried out, right? So these are the different persons who would be interested in your performance, in your academic performance, right? Similarly, if we talk about the business, there could be two group of persons who would be interested. One would be those who are internal to the organization, the other one those who are external to the organization. Internal means those persons who have an easy access to the financial reports. Internal means those persons who have an easy access to the financial reports or financial numbers of that organization. Say for example, the manager, the proprietor, or the CEO, the CFO, the partners, the directors. These are the persons who are internal to the organization. Why? Because they have this information handy. The second group of persons who would be interested in the information or the accounting information would be the external persons. These external persons are the money providers or the lenders or the investors. This can be the government of India. This can be your competitors, other companies. This could be again media. This could be your research personnel. Right? So these are the external agencies or the stakeholders who are not working within the organization, but they are interested in the financial numbers of this organization. Right? So we say stakeholders are the ones who have an interest in what happens as a result of the entity's activities. All those persons who have a vested interest for some or the other reasons. As we have seen in our earlier class, the different type of person, different group of persons have different vested interests in the information of the organization, right? These stakeholders can be classified into two, namely the internal users, which are the managers, or the directors, or the partners, or the proprietor, or the CEO, CFO, persons like that. It can also be the external users, namely the creditors. Creditors means those who have supplied the goods to us on credit. There are two ways of economic transactions. One is on cash basis and the other one is on credit basis, which means we need to promise, we are promising to pay in some day in the future. It is not outright payment of cash or through bank transactions. It would be payment after a few days, which is called as credit in accounting world, right? So creditors are the persons who have supplied goods or services to us without taking the money right now. They are expecting the money to be received by them someday in future. Similarly, equity investors or the shareholders, the persons who have invested in the share capital of the company, the government and the society, other persons in the society, researchers and people like that. So these would be termed as the external users of accounting information. Now let us see as to which type of stakeholder would be interested in which type of information, or what would be the reason of his participating in the financial numbers of an organization, or why he would be interested in the financial number of the organization. If we talk about the SEBI, Securities Exchange Board of India, what this does, it regulates the stock exchanges. It's a regulatory body. Similarly, the Reserve Bank of India, what it does, it regulates the banking institutions, banking and financial companies, and the other regulatory bodies. Why these type of stakeholders would be interested in the accounting information on organization? They being the persons of regulatory bodies or regulatory norms, they would be interested to find out if the securities listed norms are being adhered to by this publicly listed organization. So these persons would be interested in the financial numbers because of this reason. Talking about the top management, what the top management does, it decides. These are the decision makers as to whether to continue with the same product, whether to continue in the same market, whether to make any changes, whether to start up with the new projects or not. So these type of persons would be interested because of this reason, just to find out if the past projects were more successful and should we invest further in them. So they would be interested in the financial information to for the purpose of taking the decisions as to where we need to go now from this portion, from this part where we are supposed to move, right? Similarly, the investors, what the investors would be interested in, they would be interested in finding out whether their money is safe, right? And they would be interested to see if it is of any use to stay with this organization or to move out of this organization, right? So investors would be interested. One second, what happened to this? Yeah, here. Investors would be interested if the firm is investing enough to sustain the past growth opportunities and enhance them in further. If the company is doing well, they would be investing some additional funds into, pumping it some additional funds into the organization. If not, they would be withdrawing their investment. Similarly, the environmentalists, what they do is they are worried about the environment. They need to see whether the business is eco-friendly, whether it is doing any harm to the environment or not. So environmentalists would be interested in this. Financial sustainability business firms, whether they are environmental friendly or not, they would be interested in this. Similarly, central government, Ministry of Commerce and Industries, they would be interested in the financial information to decide on whether to give incentives or subsidies to a specific industry or not. What they do is, they, in order to promote the industrial growth, what they do is they keep on giving some types of incentives or subsidies to the industries. So based upon the financial information, they would see or they would decide whether some incentive or subsidies are to be given to any specific kind of industry or not. So here we see different types of stakeholders or different type of users of accounting information would be interested in different types of information from the organization. Why? Because their decision making would be depend on different factors. The factors which would be looked into by SEBI and other may not be of much interest to the environmentalists. Similarly, the investor may not be interested in the information which is being required by the central government. So different types of people, different type of stakeholders, different type of users of accounting information have different uses or different purposes of looking at the financial numbers. Is this clear? Then, talking about the globalization and accounting standards. Due to globalization, wherein a company is operating in more than one country, we call it as a multinational company. What happens, the basic problem which is faced by a multinational company is, since it is having its operations in more than one country, there is a problem of reporting its financial numbers or financial statements in different countries as per the laws prevailing there. Prevailing in that country. So what you need to do is you need to convert your financial numbers in Indian accounting standards. Suppose if you are a company originated in US, now you have a branch in India also, or say you are with Bombay Stock Exchange also. You are your company shares are listed in Bombay Stock Exchange also. Then this company which was following the US rules have to restate its financial numbers based upon the rules prevailing in India. So problems were being faced by the accountants or the providers of accounting information when the company was working in more than one country. So what happened? There is a board called as International Accounting Standards Board, which is an independent accounting standard setter. What it does? It provides rules for those companies who are working on a global platform. It would say as to what are the bare minimum requirements for the reporting purpose, and that would be in line with the accounting standards of the different countries. Their goal is to develop a single set of high quality, understandable and enforceable global accounting standards and financial reportings. If you remember, in one of our earlier classes, we have seen that different countries do follow different accounting standards. But now the accounting standards are being changed to converge them to the international accounting standards. I said that the earlier accounting standards in India have been changed to the Indian accounting standard. Now we call them as Ind AS. What is the change? These Ind AS are in line with the international accounting standards. By making the rules of our country in line with the global rules, it would be easier for the accountants, it would be easier for the providers of financial information to provide the information across all the countries, right? The International Accounting Standards Board proposed a convergence. What does this mean? Whether you need not be exactly same to the international accounting standards, but you need to be converging towards that slowly and gradually. Suppose if this is the international rules and you are somewhere here or somewhere here, So this IASB, International Accounting Standard Board, wants your rules to be in convergence with these concepts, which means you need to slowly come to nearer to these accounting rules, so that the accounting rules of the international level would match your domestic level of rules. This would be of help to the users of accounting information who are working at a global level, right? So, on account of globalization, the accounting standards have been changed now, which are in convergence with the International Accounting Standards Boards. This leads to a series of standards known as International Financial Reporting Standards. IFRS stands for International Financial Reporting Standards, means those standards or those rules which needs to be followed by those persons who are making the financial reporting at international level. Clear? Then branches of accounting. If we talk about financial accounting, we have many branches. We have financial accounting, we have management accounting, we have cost accounting, we have human resource management accounting, we have tax accounting, we have inflation accounting. So there are many branches of accounting, and these branches are increasing with the passage of day, with the development in accounting and reporting, right? So basically, if we see, the branches of accounting can be categorized into three parts. One is government accounting, wherein the accounting is done by the government organizations or government companies. Say organizations like AIMS, organizations like IITs, organizations like IIMs. What they need to do is they need to follow the rules which are meant for which are made to be they make the accounting in such a way that the reporting is done to the central government and the audit is done by the comptroller and auditor general, CAG. So this is a separate form of accounting. The next form of accounting is enterprise accounting. We are more concerned in this subject of accounting, we'll be talking more about this, right? And the next one is your social accounting. This is the accounting which is done by public or charitable organizations, like the hospitals, right? Or the societies, the clubs, the schools, the colleges. So this is a social accounting. In our accounting classes, throughout this accounting classes, we will be talking more about the enterprise accounting, not the government accounting or the social accounting, right? In enterprise accounting, we have financial accounting and we have management accounting. Financial accounting is related to recording the transactions, summarizing these transactions, finding a result out of these transactions. And management accounting is the branch of accounting which is used by the management for the purpose of decision making. Financial accounting means recording of transactions in the manner as required by law, keeping the books of accounts in a proper manner. Management accounting means the portion of accounting which is used by the management for the purpose of decision making, right? So these are two different types of accounting. Enterprise accounting specifically addresses the issues related to measurement and valuation in context of a business enterprise. It has nothing to do with government accounting or the social accounting. It talks about the business enterprises. When we talk about the enterprise accounting, it means we are talking about the valuation and measurement rules of the accounting which is used by the business organizations, for profit organizations. This could be trader, this could be manufacturer, right? This enterprise accounting has evolved into two disciplines, namely financial accounting. Financial accounting means providing the financial information related to the entity, and this is more used for the outsiders. This is keeping the records in order, finding the results of that, communicating the same to the users of accounting information who are the outsiders, generally the outsiders. I don't say that financial accounting is not used by the management. It is used by both, but majority of this would be in accordance with the requirements of the outsider or the users of accounting information who are external to the organization. Management accounting or cost accounting is that branch of accounting which is used by the management for the purpose of decision making. Cost accounting means the branch of accounting which is related to the costing of an organization. Costing means to find out what is the cost per unit so that they can calculate the sale price per unit, or what is the cost per process, or what is the cost per batch. These are all the things which are taken care by the branch of accounting which is called as cost accounting. It is more interested in costing of the final output. And management accounting, again, it is the form of it is the branch of accounting which is used by the management. The numbers may be the same, but it is used by the management for the purpose of decision making. Reporting the activities of entity to managers so as to enable them to plan, thinking in advance, control, just to see whether my business is going the way which I was planning of or which I was thinking. If there is any deviation, then we need to take corrective measures. So this is about your enterprise accounting. So this is all about the basic or fundamentals of accounting which are related to chapter number 1. In the next class, we will be talking about the chapter number 2 of the same book, which would be related to balance sheet. Right. So in the next class, we will be starting with what a balance sheet is, why is it prepared, how is it prepared, when to prepare that, and what are the uses of preparing the balance sheet, how to read a balance sheet, or why the balance sheet is important for the decision makers, right? So thank you so much.